Mhlaka 19 March 2025. The time is 1937. It's Mr. President Wonga on another Zoom session, another masterclass in terms of trading. Welcome to tonight's session. I hope you're good and I hope your day has been wonderful. It's a Wednesday. Can you believe it? It's a Wednesday. It's also an FOMC night. You know, a lot of people are talking about the USA, especially now we've got Trump and we've got Elon Musk. Hey, it's a lot of things are happening around the world. Okay. But most importantly, besides what is happening around the world, it's also important what is happening to you. You know, how is your trading? How is this week been treating you? We had cat CPI and we had obviously
Hey,
inflation
Pirates.
numbers.
Oh, I'd love to play
And
Pirates, CJ. I have a stomach ache. I can take care of that. Why
oh,
do you take it?
all right, all right, okay, we're gonna mute that. So this was the homework that is due on the 21st. So please make sure you submit before the date. So this you submit obviously on my WhatsApp. You can also use this number and Telegram and also the email address. Okay. And it's very important that you do the homework. The homework is the only way you will improve your knowledge. You will improve your understanding. Sometimes sometimes it's not about you knowing, it's about testing exactly what you know because the market is definitely gonna test you. It's gonna test you, your level of understanding what you're doing, your level of having a plan. If you are a trader and you do not have a trading plan, you are basically planning to fail in your trading because everything in this life needs a plan. If you're building a house, you need a plan. If you're gonna fly, you need a flight plan. A lot of things need a plan. If you build whatever, a lot of things you need a plan. So as a trader, you need to have a plan. Even businesses, they need to have a business plan. Actually, trading, it's a business. So you need to treat it as a business. So these are some of the questions in a homework. It's just a bit more understanding what is the main purpose of top-down analysis in trading. So go through the questions. If you have any challenging question, if you need clarity regarding any question, please don't hesitate to ask me. And these are the WhatsApp numbers, and that's my Telegram, and that is my email address. Okay. All right. Let's get on to tonight's session. Tonight we are focusing on entries. You know, you've done your trend analysis. You now understand what is a base. You now understand drop, base, drop, rally, base, rally, base, drop. You now understand all of those things. You now understand that, when the market moves, it's either going to be in the downtrend, it's either going to be in the ranging market or sideways or a base, or it's either downtrend, a base, or a rally. A rally means it's bullish, it's going up. It means it's an uptrend. Okay, so you are now understand that when you're looking at the charts, let's go through the charts so that we 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 see what we are talking about instead of just talking, because sometimes they said a picture can a picture tells what 1,000 words. Yeah. For example, so if you are looking at the charts number one, for example, if you're looking at the bigger picture, for example, at this stage that I marked here, this is where USD versus CHF, meaning the dollar was stronger in comparison to the CHF. So the dollar was on the rally. So this pair was on the rally going up. This was an uptrend, right? But when it got to this level, it started giving out pins. And it started forming what? A base. So from there, this is like a base here. Okay, started forming a base. Then you saw those pins going to the upside. So this was a base. So in this area, the market was not bullish, was not bearish, but it was moving in the range. A range is when the market is not breaking a certain level in the form of a ceiling or a resistance, or breaking a certain level in the form of a support or in terms of a floor. It's just moving sideways. Okay, so this is what we call the range. This is what we call a base, and this is what we call a sideways movement. Okay, and then after that, we saw the dollar moving on the downtrend. Remember, this is the major trend. We are looking at the higher time frame because we're looking at the direction. So from this point on, after that base, the market, so after the base, which was formed here, the market started dropping. You can see there the bigger candle that is dropping from there to there. Okay, then it formed some sort of a base here, and then it made more drop, you know, 1 2 3 drop. Okay, so a downtrend again, a drop, and then it formed a base here, then it made another drop, 1 2, another drop. Okay, right now what is happening, because we're waiting for FOMC, the market, with whenever you do analysis at any point of the charts, always look towards the left. So if we look towards the left, we can see here the market is right at the base on the left. Remember, this was some sort of a base before the market started moving to the upside. Okay, so this was a base before the market started moving to the upside. So now currently USD CHF is in the base. So in the base, it can either what it can do. Maybe you tell me what it can do at this level, because I don't wanna just drop your answer. Is it going? You expecting the market to go up from this level, because we're looking left. So the market right at the base, you can see there. This is a point where the market started making a rally. You can see these hammer right here, and you can see if you look at this level, the market and this level here was some sort of a resistance, and it broke above, and then it came back retest. So breaking above a level, coming back retest, and moving to the upside. And now it's coming back to almost similar point. Okay, just tell me what you're expecting from this level. Okay, so the market is right here. Okay, we are expecting obviously some, news from the Fed, from the chairman, to speak about the rates. Are they cutting rates? Are they not? What is happening? But obviously, this is just for controlling the inflation. Also, remember, if there's a cut in inflation in the rates, that sort of motivates companies to borrow money so they can create more products and they can expand on their operations and even encourage people to borrow money. When I say people, I mean consumers. Okay, which can push retail sales, which can also push the inflation, because when you got more money chasing fewer goods, then you're gonna have inflation going up. Okay, so that can skyrocket rockets in terms of prices. So looking at this one here, what happens? We said this was a base. Okay, after a base was formed, the market broke above this level here, and then it went on the rally. After the rally, then there was a base, and then after that base, the market started dropping. So this was the first drop, and then a base, and then another drop. You can see this candles, this black candle, a drop, and then the white candle is another base, and then another drop again. So as you can see, this was a first drop. Okay, this was a first drop, and then It came back to almost similar level here, and then another drop, and then it formed a base here, and then another drop here. And this drop now is almost similar level to that level where the market actually broke above this level here. Okay, I'm gonna mark that again so we can all be in the same page. So this was a level of resistance. Okay, resistance is like a ceiling where the price is actually touching and going back. Okay, so this was a critical level because it sort of fake out. So some traders saw this, that actually now the price is actually gonna drop. Okay, but what happened? It broke above 1, 2 candles. Remember, there were some traders that thought this was a sell and put their stop losses around here, and the market broke above and then came back, retested above, and now it's right here in the similar level. You can see here the market broke above this level, broke above, retest, went above, from a base, came back here now. Now we are in the similar level as this one. You can see here, even the market is forming some sort of a double bottom, which is what some people call it a W. Okay, if I remove this, you will see clearly. Okay, let me remove this. So the market went above, came back, and formed some sort of a W. So when the market break, you expect it to touch a certain base there. Okay. So this was a bit of a summary what we spoke about in terms of last session, which was a lesson on trends. So this is a base. Now after this base, you saw a movement towards which was a rally, and then after a rally, you see another base here. Then after that base, you see a drop. The market started dropping. After this drop, 1, 2, 3 drops, then it started forming another base. And then after that base, there's 3 break candles, drop, drop, and then a base again, and then another drop. Now we're here at this level here. This is our base once again. So it's like coming back to the same point where the market started off a rally. Okay. First sign, now it's coming back again. This is the first time that the market is back into this range. Okay. So that is a bit of a summary. Okay. So now we need to look at today's notes before we dive into more examples. Just want to give you a bit of a summary for those that just listen, that just join us now. Okay. So now we need to talk about the entry. Okay. So there are 2 entries that I would like you to focus on. There is a middle trend zone entry, and then there's an ending zone entry. Okay. The middle trend, or should I say the middle zone, is where prices, there are a lot of stop losses, and the price where the price make a lot of stop over. When I say stop over, it takes out a lot of stop losses, and the market actually look for liquidity. When we say liquidity, we are talking about orders. Remember, if you are a trader, you are placing order to buy, order to sell. Just like when you go to the supermarket, when you go to the restaurant, they ask you, what is your order? You want to buy this, you want to buy that. So same story in the market, in your MT4, your MT5, whatever platform you are using. If you are trading, you are simply placing orders. Orders, what are you buying? What are you selling? Okay. Obviously, you want to sell something because you're expecting the price to drop. That's how you make money. And you're going to buy something if you're expecting the price to go up. That's how you make money. Okay. So the ending trend is a trend zone where prices will change direction. So if a price is changing direction, we're talking about the price. Let's say the price was dropping. It formed a base. Now, after it dropped a base, now it's going to do a rally. That's what reversing is. That's what changing direction is. So the price, obviously, before it can change direction, they need to look for liquidity. When I say liquidity, they need to look for orders that are in the opposite of the direction that the traders, that the bankers want to take. For example, if the market makers or the bankers, they want to drop the price, they need to show, you need to, as a retail traders, you need to see a market that is going to be bullish. You need to see those pins going up. And those pins that are going up are simple a trap for traders to place orders. Remember, liquidity is equal to orders. Traders to place orders, but in the wrong direction. Remember, we're saying the ending trend is when the end is the end price, is where the prices will change direction. The only way the market will change direction, it will only change direction when there is a liquidity that is going opposite of the direction that is actually moving. Remember, when the price has been going down, a lot of traders would believe it's not going to reverse anytime soon. This is a trend. Trend is your friend. Go with the trend. But actual facts, what the bankers are doing, what the market makers doing is looking for orders, constantly looking for orders. Okay, a lot of people are buying, a lot of people are selling now. They're thinking it's a downtrend, it's thinking it's a recession. The news are talking about, hey, this thing is not gonna reverse, gonna crash, gonna crash. And a lot of people start selling, 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 selling. And now the price is dropped, and the market makers see, okay, a lot of people are actually selling. For us to make money, we need to go opposite of what a lot of people are doing. So they change direction. So at the ending trend is where the actual trend that we've been following is going to end. And the way it's going to end is going to give a stop hunt. And the way it's going to end is going to give a false move. And the way it's going to end is going to do a fake out. A lot of traders are going to be faked out thinking that this market is going to drop, it's going to give some spikes, it's going to give some pins, and you place your trade right at the time where the market is changing direction. And when you look at your price, you're like, yo, I got a perfect entry, but in the wrong direction. It happens. A lot of times you see that. You get a perfect entry, but your perfect entry is in the wrong direction. Why is that? Because you were faked out. Because you entered at the point of an ending of a trend, you know? So that is why it's important for you to master understanding the way the market moves. 3 level of drops is very important in the market because a lot of traders now believe that this market is in that trend. Maybe 3 level of drops, they believe is crashing. A lot of people will talk about this. Hey, the US 30 has been dropping for over, I don't know how many days now. It's definitely there's a market crash, definitely a recession, you know. And people say the crypto market has been dropping. It's a huge dip. We are dropping. Our crypto are going to zero. And the news will make this such a huge headlines. Why headlines? To install fear to people. Because when you are faithful, when you are fearful, sometimes you do not place, you don't follow the plan because you are fearful. But some people, I think there's a quote by traders that said, when others are greedy, be fearful. When others are fearful, be greedy. Okay? But I don't recommend being greedy. I recommend sticking to the plan. Okay? So, and then, so the zone entry, for those that are still new in terms of our strategy, these are the Fibonacci level. We will talk about Fibonacci on another session. Fibonacci is basically marking the price in different levels. So 5, let's say 5%, 11%, 16.8%, and 50%, and 61.8%. What do I mean by that? For example, let's say you've got a price of something that is costing 100 Rand, okay? A 5% drop means that thing has dropped by 5 Rand. 11% drop means it has dropped by 11 Rand. At 16.8, 16 Rand, 80 cents. 50%, dropped to 50 rands. 61.8%, it has dropped to 39.2%. So that's what Fibonacci simple means. It means a price of an instrument has been dropping by certain amount of percentages. So you know if it has dropped by 50%, you know, it's like having a big sale. You know, having a big sale. Say the shares of these so companies have dropped by 50%. For investors, that means sale. It's on sale. The Bitcoin price has dropped by 50%. It's a big sale. Property prices have dropped by 50%, which is unheard of. It's a big sale. You know, USD has dropped by 50%. It's a huge sale. But somehow, I don't know why, somehow, when it comes to investing in, for example, in gold or any space of investing, people don't seem to recognize sale. They say if they see a sale, they say it's a crash. Somehow, over time, the market always recovers. And you have to be patient. And if you're not patient, chances are not chances are the way the market works is just a transferring of money from those that are patient, from those that are impatient to those that are patient. A lot of times your analysis plays out according to the way you have analyzed. But the problem is you are not patient enough to see it through. So you take profit early, or you enter early, or you enter with a big lot size, or you're not disciplined enough, or maybe you have not placed even an order. So you miss out of a trade because you are not placing pending orders. Okay. So if you're not familiar with pending orders, there's a video that I made a while ago talking about once you've seen the analysis that you can place pending orders. Okay, so that's very important. Okay, so we measure the zone by using the Fibonacci. Okay, we will talk some other time in terms of the Fibonacci, like a brief history about it, so you can understand. This is something, if you are into stats, if you're into maths, you can study over it. Okay, so the level on the Fibo that we use obviously is 5, 11, 16.8, you know, and 15.8. Obviously, you can add this to MT4 because they are not there. You can add the 5, the 11, and the 16.8. You can add them. Okay. You simply go to your Fibonacci, you say edit, and then you add. Okay. So these are the zones. Okay. I think if you have seen my analysis, you'll see that these are the zones that I use. Okay. So the first zone is between the 50 and 61 Fibo. This level is already there in your MT4, and this level is where you are more likely to see, you know, in terms of the market forming those support levels, forming those double top or those double bottom. It's like a midpoint, you know, it's like a midpoint. You know, it's like after the market has been moving, you see the market retracing to this level, you know, and you can see in these levels, there's a lot of liquidity. There are a lot of orders in this zone between the 50 and 61. And sometimes the market will go to the 51 and 60. Then it goes back to the original trend. If the market was dropping, it will drop by 50%, and then will go further up. You know, if the market was on the rally, it will again do the same thing, drop, then on the rally. If it was dropping, then be on the rally, 50 to 61 point level, and then continue with the rally. So this zone is the very best, and you can get out of trades, especially if the zone is fresh. When we say the zone is fresh, what do we mean? We mean that zone is the first time coming back to it. That is, if it's the first time the market is touching a level, it's a perfect fresh zone. It's almost like saying If let's say you go to the mall, you go to the mall and you are selling let's say um you are selling ice cream and there's no ice cream in that mall. Lucky you, there's no ice cream in that mall. Or maybe you go, let's just say you go to the event, and that event is hot and you're selling ice cream. Let's say there is a VIP section, then there's a general section. If you go to the VIP section, maybe there's about 50 people. General section, there's 100 people. Okay. When you go to the 100 people, for the first time, we say it's a fresh zone. Go to the first time, chances are a lot of people are gonna buy. Okay. Then you go to the VIP section, and again, first time, a lot of people are gonna buy. Okay. Now, when you go to the second time on the general section, chances are a couple of people bought ice cream. So they don't have to buy. But some people will buy because they saw other people buying. It's what happens in the market. People say, this person was buying, so that's why I jump in and I bought. So same story, VIP search, general section, you go there, some people already bought. So now you do not have orders because some people already bought. They don't need what you are selling now, you know? Then some people saw those that were buying, but now you've got less customers, you know? So that is why we're saying the first time the market touches a level is always best and is always going to react. Not always, but the probabilities, the chances of it reacting are very high. Okay. So that word is very important in trading, probabilities. Okay. So probabilities, that's why we have to use what we call a confluence of triggers, things that are confirming your entry. Another entry point we said is it's a 5 to 16, 5, 11, and 16. This level obviously you need to add it manually on your MT4. And this level obviously at the end of a trend. Okay, we said the 50 and the 60 is the middle of a trend. And the 5, the 11, and the 16.8 is the end of a trend. Okay. So, and in this level, we are more likely to see a Quasimodo, or some people call it a QML. We are more likely to see a head and shoulder because the market is going to start to reverse, you know. That's why we say changing of direction, more likely to see head and shoulder. I think that was one of the questions in the homework. Okay, I think that was favorite homework. And the double or the triple top, you know, sometimes when you see the market start touching the same level, first time, second time, then you're like, okay, now, really now, the market is gonna reverse now. Okay, you know, but all I'm saying is it's very easy to see because the clear pattern, a clear zone, and it's very nice if you are getting at the zone when it's still fresh. Okay, so the ending of a trend, chances are you're gonna see the head and shoulder pattern. You're gonna see the QML. So we will talk about QML on another session where we are focusing on chart patterns because it's one of a pattern. I think our next section we will talk about the Fibonacci. Okay, for now, let's do some examples. Okay, let's do some examples so that we have a bit more understanding. Okay, we said, okay, let me do another pair. We're just gonna do another pair. I think this is one pair that has been surprising me a lot this week. Okay, yeah, a lot of surprises on gold this week. Okay, let's see what is going on here. Okay, all right, so let's start off by doing this. Let's remove everything. Okay, all right, all right, so now we've got a pair, right? This is okay. By the way, if you are holding some trades, and you want us to analyze a pair as part of the lesson for tonight, don't hesitate to ask. Remember, don't hesitate to ask on the chat box, okay? So we said on the first section, we change this into a line chart so we can mark these levels. So we can mark the highs and the lows, okay? So we are marking the highs and the lows, okay? And this is another low here. And you can see these zones, okay? The market broke above here, okay? And the market here broke above. So what happens? It went back here and it broke above this level here. Okay. What I'll try and highlight is what we're talking about. Okay. So okay, we said if the market, for example, this market was on the downtrend. Okay, it touched that level and it started moving on the downtrend. Okay. So this is US SEC. US SEC as it's Nasdaq. Okay. Okay. So this was this level, right? The market dropped towards this zone, and after dropping, it went back up. So we want to measure, okay, using a Fibonacci. Okay. So from there, we go from the high to the low. Okay. Then you start by zooming in there. Okay, and remove everything else. So we can only be left with the Fibonacci. Okay. Okay, so if you see this here, let's zoom out a bit. Let's change this into candlesticks. Okay. So if you see this zone, okay, I'm gonna mark this. If you see this zone here, this is the 5 level and the 61. Okay. If you look there, you see a pattern. Okay, see a pattern there. Okay, see a pattern. So that is where we said it's a zone. This is the ending of a trend. Okay, the middle of a trend is this one here, where you've got this here, just above the 61.5061. This is where you're looking. Basically, what you're looking for is this. The market has been on a downtrend. Okay. What you're expecting to do, you are expecting it. So, all right, let's do this like this. Use this. So the market has been on the downtrend. This is a downtrend. Okay, let me just remove this so I can clear. Okay, and remove that too. The market has been on a downtrend. Okay, so what happens now after reaching this level, and that is a level if you look left. So now after reaching this level, the market started reversing towards the upside. And the upside is also moving closely to that level of 61.8 and 50. Okay. After touching that level, what happens? The market started reversing back to this level of 61.8, which is this here. Okay. Then after that, there was a huge bullish movement to the upside. Okay. And there was first push. Okay. The market retrace and then another push again to the upside and then another pullback and then another dead push. Okay. So after a dead push, what happens? Then the market made a huge drop because it got a new high Then after that huge drop, it started moving in the range. So this is like a sort of a range. Then it broke below this range. Okay. Okay, let me see. Is there a comment? Is there a question? What happened there? Okay. Okay, AUD, USD. Okay, perfect. Okay, so first drop. I mean, this. So after the market touches the end of a zone, so there was this rally, first rally, then a second rally, and then a third push here. Okay, and then it started moving in the range. Then there was this drop here, drop, then another drop, and now it's here, almost similar level as that. Okay, let's use the AUD USD as maybe as our case study. Case study. Okay. Oh, it's good. All right. All right. So we said the first thing that I normally do when I do analysis is this. I first mark the highs and the lows. Okay. And the way it's looking, AUD, the way it's looking, you can see this here. It's like some sort of a compression, you know, some sort of a compression towards the high. All right. So now if we change this from this to a line chart, you can see clearly what I mean by this. See, it's moving in some sort of a range. Okay. So now we mark this high and we mark that low. Okay. So we take the Fibonacci since the market has been dropping. We take from the high towards this low. Okay. So what does this give us? It gives us a picture that obviously, if we talk about the 50 and the 60, this is what we are looking at. But right now, this market is here, okay? And with it forming this thing here, like a compression, chances are it will drop towards these levels here. And if you look closely monitor it, between these levels here, you'll see a pattern. Okay, let's change this into a line chart. And let me remove these lines here. You'll see a pattern. So a pattern, most of the time, in this 61.8 is where you see a QML, or is where you see a head and shoulder, okay? Or is where you see a triple top or triple bottom, okay? So this, my expectation in this, because it's been moving like a compression, is that, and this type of a compression is that it can drop towards this level before moving further to the upside. Okay. Yeah. Yeah. So if you go in the smaller time frame, the market needs to go below these levels, you know, below these levels. And if you mark that zone, I can do this, and you can see that is a base. You might be running out of time, but I'll share the analysis on Telegram, okay? Yeah, so this can happen towards the fifth one.